G'day legends, welcome back to Gold Jumper, where we track the world's most precious rocks. Jump up and under, let's get into it, because the market is moving like a startled roo. Today we are breaking down the absolute firestorm in the Middle East, affecting your trades. We are looking at why oil is going mental and if copper is finally joining the party. Then we'll dive into the gold charts to see if we're headed for the moon or the basement. Before we start, this isn't financial advice, so don't bet the farm without doing your homework. Here is the big question. Is the US greenback finally losing its crown to physical gold? Let us know in the comments what you reckon, and smash that like and subscribe button. Straight into the thick of it, Operation Epic Fury has finally cooled down this week as a ceasefire takes hold. Behind the scenes, Iran submitted a sweeping 10-point peace proposal that formed the backbone of diplomatic talks. The plan calls for a permanent end to hostilities, not just a temporary pause in exchange for reopening the Strait of Hormuz. Iran demands the lifting of all US sanctions and guarantees that Iran won't be attacked again. The proposal also seeks an end to regional fighting and Israeli strikes on Tehran's allies like Hezbollah. Tehran even floated a fee for vessels passing through Hormuz, with revenues to help rebuild war-torn infrastructure. Markets reacted to the ceasefire and peace plan, with oil flowing again and immediate energy fears easing. Gold surged higher, climbing toward roughly $4,812 per ounce, as traders reacted to the ceasefire and easing Middle East tensions. The mood remains cautious even with these gains. Geopolitical uncertainty and ongoing negotiations keep traders on edge. On April 8th, the Asian session saw gold holding its gains, with markets steadying after several days of strong upward moves. Every time diplomatic headlines emerge, gold reacts. But in this case, the metal kept most of its momentum, showing safe haven demand remains strong. It's not a free-for-all, though the dollar remains firm, supported by ongoing Federal Reserve strength, keeping upward moves in check. The US dollar index is hovering around the 100 mark, keeping gold pricey. It's a delicate balance. Gold is climbing on easing war fears, while the strong dollar keeps upward moves measured. Iran's 10-point peace plan has eased some risk, helping the yellow metal maintain its gains. Israel has paused military actions under the ceasefire, another step toward broader calm in the region. This geopolitical calm is supporting gold's rally, allowing buyers to hold positions with confidence. But if talks falter or new flare-ups emerge, gold could jump even higher, feeding off safe haven demand. Traders are keeping one eye on the news and the other on key support and resistance levels on the charts. Tension is lower than at the height of escalation, but gold remains sensitive to sudden geopolitical headlines. The ceasefire is holding for now. Iran's 10 points provide a roadmap for calmer markets and bullish sentiment. For gold, both scenarios, renewed conflict or successful diplomacy, offer massive upside potential and volatility we can watch closely. Now let's talk about black gold, because oil is finally cooling off after all the Middle East headlines. West Texas Intermediate crude has slid below $100 per barrel, dropping sharply after the ceasefire eased fears of a prolonged supply disruption. That's one of the steepest single-day declines in recent weeks, as traders reassess global energy risk in light of calmer headlines. Forecasts that once whispered about $120 a barrel are now taking a back seat while the market digests the news. The Crude Oil Volatility Index, or OVX, remains elevated above 100, showing traders still expect sharp swings despite the price drop. So even though crude has eased, the volatility backdrop remains high, keeping energy markets exciting and unpredictable. When oil was climbing earlier, it tended to drag gold and other safe havens up with it. Now that prices are easing, gold can move more independently. High oil used to mean higher inflation expectations, which usually boosted metals, but with prices cooling, the inflation narrative is shifting. There's still a chance that renewed flare-ups could push crude back up, injecting fresh volatility into both energy and metals markets. For now, the energy shock is playing a very different game than it was just days ago, and traders need to stay alert for sudden moves. Moving on to our favorite red metal. Copper is showing steady strength after recent gains. Spot copper is trading around $5.64 per pound, holding near elevated levels from earlier this year. Analysts are watching for a solid close above $5.62 to confirm further upside potential. If copper holds this support, it could test higher levels over the next few weeks. The copper-to-gold ratio remains relatively low, signaling that investors are cautious about risk despite strong industrial demand. A low ratio often shows smart money is focused on safety rather than speculative growth. If copper continues climbing, it could indicate the global economy is more resilient than it appears. Keep an eye on copper. It often leads broader market trends and gives early signals on economic health. In the Australian markets, resource stocks are reacting positively to these steady metal prices. For traders in the land down under, this makes copper an interesting market to watch closely. The Aussie dollar versus the US dollar is sitting pretty at 0.6949. That's a decent hold considering the greenback is trying to stomp everything in its path. The ASX 200 index had a massive rally, jumping over 130 points. Tech and materials stocks are leading the charge while defensive sectors are lagging behind. Short sellers got caught with their pants down when the market reopened after the break. But the index is still about 5% below its record high of 9,200. Local miners like BHP and Rio Tinto are enjoying the rebound in commodity prices. It's a great time to be a resource trader in the land down under, that's for sure. Just remember that the Aussie dollar is very sensitive to what happens with the war news. Any escalation will see the greenback fly and our local currency take a bit of a bruising. Now let's get into the nitty-gritty with a deep dive into the gold technical analysis. Over the last couple of trading days, gold has been moving in a range roughly between $4,650 and $4,800 per ounce, reacting to geopolitical news and safe haven demand. Resistance has formed just below about 4,900, where the recent upside runs have stalled. On the downside, intermediate support is clustering near about $4,620, with a second layer near $4,550. Short-term momentum indicators, such as the relative strength index on the daily chart, are showing a mostly neutral bias at present, suggesting neither extreme overbought nor oversold conditions. This means the market isn't wildly overextended, yet more like a wallaby sizing up its next jump. If sellers get control from here, the price could pull back toward the $4,600 area before attempting another leg up. Moving averages on short and medium timeframes continue to signal mixed trends, with some averages still acting as dynamic support near current prices. On the daily chart, the structure remains in a consolidation phase rather than a clear trending mode, which opens up both bounce and breakdown scenarios. There's still potential room for the bulls to run if key resistance near $4,900 is cleared with conviction. Meanwhile, the Bollinger Bands have been fairly wide, reflecting elevated volatility as traders digest macro and geopolitical cues. Intermediate Fibonacci retracement levels also line up with support around the mid-4,600 range, making that zone notable for potential dip buyers. Breaking significantly below, approximately $4,500, could open the door to deeper retracements, though that has not happened in the last couple of sessions. For now, buyers seem to be defending the value area between $4,620 and $4,650. Higher timeframe trend indicators still show a degree of constructive behavior, as long as prices stay above the key support zones. Short-term patterns show attempts to form higher lows, a technical sign of buyer ingenuity on dips. Traders aren't waiting for perfect pulls, they're stepping in as price approaches support. Short-term exponential moving averages are providing dynamic support on the intraday charts. This mix of indicators tells us the current trend has strength, but still needs a clean breakout above resistance to confirm a fresh leg up. A clear move above roughly 4,900 could open the way towards psychological round numbers, like $5,000. On the flip side, if sellers break below the $4,600 support zone, we could see pressure toward lower levels. That would signal a shift to a more bearish short-term outlook if it happens. MACD on many chart setups is showing consolidation rather than a strong trend, consistent with price range behavior. Market uncertainty remains the dominant theme, so keep your stops tight. On shorter hourly charts, signals are mixed to mildly bullish, reflecting intraday bounce attempts. We're watching for clean continuation patterns on the 4-hour chart to confirm any next sustained move. Volume patterns have shown spikes around key intraday levels, indicating active participation when those zones are tested. Don't chase price at the top, wait for confirmation or pullbacks for better risk-reward spots. Key supports, around $4,620, remain crucial for sustaining bullish stances. That support area also looks like a potential buy the dip zone for risk-managed entries. If the bulls maintain momentum, we could test the upper boundary of the current range. It's a high-stakes tussle between bulls and bears in this chop zone. But with geopolitical risk still present, gold's safe haven appeal remains intact for now. Remember that the US dollar and gold often move inversely. Dollar strength can cap gains here. And if the greenback weakens, gold could catch a fresh bid back toward its early April highs. Central banks remain structural buyers, adding a longer-term support component under prices. This extra demand helps provide a buffer for retail traders too. Even if we see short-term dips, the longer-term bull case is still constructive. Volatility is elevated compared with historical norms, so expect wild swings. Use those movements to your advantage and don't let noise rattle your nerves. Gold remains a favorite hedge amid ongoing uncertainty. Between energy price swings and geopolitical developments, there's plenty for traders to watch. Keep an eye on the copper to gold ratio for any sign of broader sentiment shifts. If industrial metals start outperforming, we might see rotation out of safe havens. For the next few days, gold looks likely to remain the king of the jungle in the metal space. Keep your charts clean and your focus sharp because the next big move is coming fast. We are tracking every candle and every headline to make sure you stay ahead of the pack. The market doesn't care about your feelings, it only cares about price action. So stay disciplined and stick to your trading plan no matter what the news says. We've seen this movie before, and gold usually wins the award for best performance. We are tracking every candle and every headline to make sure you stay ahead of the pack. The market doesn't care about your feelings, it only cares about the price action. So stay disciplined and stick to your trading plan no matter what the news says. We've seen this movie before, and gold usually wins the award for best performance. To recap, the war in the Middle East is the main driver for gold's safe haven appeal. Oil volatility is at record highs, making everything in the market very jumpy. Copper is showing some strength, but investors are still being very cautious overall. The Aussie dollar is holding its own against a very strong US greenback right now. Gold is consolidating near $4,700 after a massive impulse. We are watching the golden ratio floor and the $5,000 ceiling very closely. The bulls are still in control, but they need a bit of a rest before the next big jump. Now tell me, legends, do you think we see a $5,000 gold price this week? Drop your price targets in the comments and let's see who the best chart reader is. Don't sweat the dip, just more room in the pouch for the next big jump to the moon. Stay active, stay legendary. Catch ya.